We've seen the impact of tariffs on some of the goods that we purchase, and of course we've seen the impact on tariffs on the products that we produce and sell. I think the question becomes, when do those price increases potentially lead to demand destruction, and when do you see sales fall away?
In the past, you've said the North America growth strategy was positioning the company well, but are shareholders going to have to wait a bit longer for the strategy to pay off?
Well, I think there's a couple of pieces to that, Kirsten. What I would say is you're referring obviously to the write-down in the BCP assets. That's an acquisition we made a couple of years ago. That transition has been slower than we expected, and disappointingly so. So we've reflected that in the write-down of the assets. But the other parts of the North American portfolio, quite frankly, are powering on. The expansion at North Star, the debottlenecking. We've had really strong results for the last few years out of our buildings business. So there's a bit of a mix there. Overall, I still think the most attractive steel market in the world to invest in is the United States.
Do you expect the US sectors which BlueScope supplies, that is cars, white goods and agriculture, are going to come under escalating pressure as a result of changes to trade and tariffs?
Look, that's an interesting question. I would suggest just at this time what we're seeing with some of the changes from the administration around tariffs and protection is we're seeing a massive amount of investment going into North America, where manufacturers of automobiles or white goods or whatever is subject to the tariffs are actually going to the United States and investing in manufacturing in country. Now, that's the policy and the strategy we've typically followed. We have our 3 million tonne mini mill, North Star, in Ohio. So I think we will be the beneficiaries of that. That's one of the things that's, I think, very good about our strategy of operating in country for country.
But are you already seeing rising input prices to your operations in North America?
Yes, we've seen the impact of tariffs on some of the goods that we purchase, and of course we've seen the impact on tariffs on the products that we produce and sell. I think the question becomes, when do those price increases potentially lead to demand destruction, and when do you see sales fall away? And we've seen no sign of that as yet. Now, it's still early days. The last inflation numbers out of the US weren't particularly bad. But I think the longer-term implications of the tariffs and the tariff policy that's being put in place by the current administration, we're yet to see. But we're well positioned. We're the low-cost manufacturer, producer in the country. We've got a fine asset. So we're very well positioned relative to our competitors in that market.
Let's talk about input costs in Australia. You've labelled energy costs dire. What are the consequences of that for BlueScope Steel?
Well, the consequences are we see a deindustrialising of the country, and that's at complete odds with the Prime Minister's future mate in Australia. The federal government's called for submissions into the East Coast gas market and reforms for the East Coast gas market, and we made a submission just last week. We think there's things that the government can do immediately to take the pressure off energy costs and increase the supply, and then we believe there's opportunities for the government to work on many of the tools and many of the processes they have in place now to make them more transparent, make the market more liquid, put some supervision over it from a body like the ACCC to ensure that there's longer-term and enduring reform in terms of getting reliable and competitive energy into the East Coast gas market.
What can the government do right now?
Look, I think there's options for fields going forward to have a reservation. We've seen over many years now in Western Australia where there is a reservation component of gas production. That's kept gas prices low in Western Australia, and it's driven a massive amount of investment. So we think there's the opportunity for prospective reservation, to ensure that some gas is kept and put into the local market. We currently see situations like spot cargoes that are being exported and sent overseas rather than being consumed or put into the East Coast market. And also, quite frankly, I'd much rather see that than money invested on terminals to re-import gas that we're exporting. That just doesn't make sense to me, and I can't see how that would provide a competitive price gas for the East Coast.
Would having a gas reservation policy push the renewable transition further down the road?
Oh, look, I think what's really important and we're starting to see and hear is that gas has a role to play in the transition. If you think about our steelmaking process, if we were to move to a DRI process to produce the amount of steel that we currently produce, natural gas and DRI would see our emissions reduced by 60%. So I think some of the debate that's gone on has been about perfection rather than a significant improvement. A 60% reduction in our emissions is a massive amount of carbon, 3.6 million tonnes. So there is a role for gas to play in the transition, and I think the public and I think governments and regulators are now becoming much more aware of that. There's no switch here from the current baseload energy that we have to renewables. There has to be a transition, and gas has got to play a role in that.
Are you saying it's time to get realistic?
Yes, correct.
Many companies are abandoning their green hydrogen pilots. Is it becoming increasingly clear that green hydrogen isn't the answer industry had hoped?
Look, I think the pilots and projects that you're seeing that are proving to be uneconomic are just another example of why we need renewables. We need gas as a transition. Hydrogen is incredibly prospective, but the current economics of it, unfortunately, don't make sense. That's been our concern from the start. So we need affordable, reliable, renewable energy, and we need gas that's competitive and plentiful to allow us to transition. I suspect hydrogen will be an opportunity, but in the current environment, it's hard to see the economics work. I suspect that's down the track.
What does this mean for BlueScope Steel's own hopes of manufacturing green steel onshore?
We have plans in place to deal with the current steelmaking assets. So the reline, the blast furnace reline, as we've said publicly and called, is our bridge to the future. That allows us to think about new technologies as they emerge. DRI, again, requires a large volume of competitively priced domestic gas. So the blast furnace reline allows us to deal with the transition as and when that occurs, but there is no doubt there's a role for gas to play in that transition.
Can BlueScope, along with other international steelmakers, make the Yalla proposition work?
Look, Whale is a very interesting but also very complex situation. A recognition of the scale of it and the complexity is the fact that we've brought together three of the world's biggest steelmakers in a consortium to deal with that. We're very early in the process. I'd like to make that point. We're still in the first stage of the administration process. I suspect that's going to take some time. But the consortium we've brought together is a formidable group of players for us to think about the steelmaking assets, but not only the steelmaking assets, the iron ore reserves that are in Whyalla, and what potential there could be for an iron-making industry in the future, both to supply our domestic needs, the domestic needs of the consortium partners, and even potentially an export market.
Just how important is Yalla to Australia's overall ambition of decarbonisation and the government's future Made in Australia process?
Well, I think you would expect me to say as a steelmaker that what I'm most passionate about is ensuring that we maintain sovereign capability in our country. And if we don't have the right policy settings, if we don't have the right enablers, then that becomes increasingly difficult. And you see that, unfortunately, with the situation that Whyalla finds itself now in. So we've talked about decarbonisation, but the enablers that are required for that, renewable energy, raw materials, public policy. So I'm a big fan of sovereign capability and ensuring that we maintain the sorts of skills and capabilities that we have in our manufacturing businesses in Australia, and we'll continue to argue for public policy that supports that.
Would you expect Yalla to come up in conversation at this week's Economic Reform Roundtable?
I'm not sure whether Yalla itself would be a subject of the roundtable, but I think, again, the enablers that go around that, anything we can do in Australia to reduce red tape, to harmonise standards, to make it easier to do business, is going to help businesses like Whyalla or our own business or our customers to allow them to get on and attract the investment dollar and continue to grow and employ people. And that's ultimately what the roundtable should be focused on.
You travelled recently with the Prime Minister to New Zealand. Have you asked for anything specific to be looked at during this economic reform process?
Look, I think the broader productivity debate, and I'm clearly not there, we have our results this week, but the broader productivity debate, again, around ease of doing business, reduction in red tape, harmonisation of standards, they were some of the topics that were talked about with the two Prime Ministers in New Zealand. How do you make it easier to do business across the divide between Australia and New Zealand? How do you harmonise standards so something that works in one country is the same as the other country. So they're great examples of productivity at work, and taking those restrictions, impediments, inefficiencies away is what productivity is all about.
Mark Vassella, thank you.
Thank you.